Hey everyone, let me know the sound's working. Sorry getting a late start today. It's still going to be just a few more minutes before we get going. Just wanted to get the screen lit up so you folks can get on. Awesome. Be getting started here in just a couple minutes. Just finishing up a couple things. About one more minute, folks. Getting ready to go. Yeah, David Ford, I saw that. That's awesome. I used to live in Victoria, David. Camberwell. So did Jay. Okay, folks, welcome. Sorry about the late start. Crazy morning for me. And I wish my boss paid me more to do this. I'd maybe be more prompt. I'm just joking. Couple things, just clean up. We've got plenty of folks online here. Hey, Leslie from California. What about Perth? You know what's funny is we had an office in Perth, and I never made it out there. It's too far. I lived in Melbourne for a while, and then also in Adelaide. And yeah, so anyway, that was a very long time ago. Okay, so number of things. It's Fed Day. There's a number of things that I want to cover, and I talked about this in the commentary last night, just bringing up some notes. And you know, for the most part, as we look at, you know, markets are just completely flat. No one knows what to do anymore, and it's been interesting just watching the markets churn. We couldn't get above 4,200. Now we're churning just above it, and you know, there are still some objectives and things that I'll go through here shortly. And I guess, you know, with the Fed is kind of crazy. I put out some numbers last night. If you look at just what happened, what's going on in retail sales right now, never seen any numbers like this. And there's no way, I don't even know how to frame this, okay? There's no way to try to measure what's going on in the economy right now and compare it to any other period, because there's never been anything like this. You know, if you annualize the last 3 months, you got a 50% gain in retail sales. I think car sales last 3 months annualized is 90%. You know, I talked about these numbers last night. So you have to wonder what we're going to hear from the Fed shortly, what they're thinking and what's going on. And one of the things that I want to bring up is, you know, the Fed has changed its, I guess, who is in the Fed. You know, for many years it was bankers and business people, and as we watched over time, it then became economists were, you know, in the Fed. And anybody that's been around and maybe for more than 3 weeks around the markets, no, economists are never right about anything. And the Fed, I'm not sure, has ever been right about anything. They're even late or early. Thanks, Supatanki, for that. Is Paul going to crash the market? I don't know. We're going to find out. So I'm setting this up right now. I really appreciate that. And but what I'm going at here is we went from having, you know, business people and banker types maybe understanding the banking business to economists, and then ultimately, you know, we end up with a makeup of the Fed being, you know, very progressive Ivy League economist until we get what we got, including Janet Yellen's a perfect example of that, right? And even Ben Bernanke, same thing. You can go through all this. Maybe the only purists that were still around were Paul Volcker, you know, Greenspan to a point, but Volcker was a purist, a banker type. He was a hawk. He wasn't afraid to do what was necessary, and he didn't hide behind all of this crap that we put up with today. We live in a world where nobody wants to be offended, and if they offend somebody, then somehow, you know, that's not going to be appropriate. So asking, will Powell going to crash the market? He's going to do everything he can not to crash the market. We know that. But, you know, all of a sudden you start to see all of the ideology that's been taught. I know a lot of you folks are a lot younger than me, come up to the university system of the last 20 years, and all this stuff has been put in to play, and now we're seeing it in the real world. We're seeing this go on. I was talking to a good friend of mine. Just want to go through this. This will all make sense in a few minutes. But I remember in the day when I was around 32, and very active in the markets, doing very well. And I realized at that point that we were going to be the next ones to run the broker dealers, to run all of this. We were the new blood coming up. So all the folks that are in their 30s and 40s, they're the ones coming into play now that are going to be running the corporations and all that stuff. It's a natural change of it's a natural change that goes through life in general, right? So then it's up to us old guys to actually criticize and try to keep some kind of sanity. But all of the things that we're seeing right now in the Fed, all the things we're seeing in the economy, MMT, it's like it's the time to try anything that is as radical as you want. This is the time to do it. And that's exactly what we're seeing out there. And listen, I don't know. This stuff may all work, and we're going to come through this. You've got the bubble guys on one side, and then you've got guys like me who are willing to play along until the markets tell me they're not going to keep doing what they're doing. So one of my mentors used to always say, expect the market to do more of the same until it shows you something different, right? And it doesn't show us anything different. It continues to show more of the same. The Fed continues to do all the stuff. Now we have this radical spending machine that wants to spend trillions of dollars. The current administration wants to spend just unleashed 3 trillion, 5 trillion, 12 trillion. They keep throwing the numbers out. And you know how much of it they're going to actually do? Probably not very much of that, but it will be much more than anyone expected in the end. And so that's why I'm going to get to a point here in a minute, so bear with me. That's why we see everything we're seeing as far as the asset markets going and the equity markets and even seeing massive inflation yesterday, 0.8, 6.6% year over year in producer prices, and the 10-year treasury is flat. Okay, that's okay. We're going to go through all that stuff here in a few minutes. I'll go through the charts on the treasuries and everything. But this is the world we live in. So I'm still expecting more of the same as we come into the Fed. I'm going to not go. I have in the past live streams on Fed Day. I brought up and we watched Powell's response together. We're just going to watch the market's response today. And I'm going to depend on you folks to kind of let me know if there's key points or something starts to move. Let me know what you see, because you're better at, I'm trying to focus in on whatever I'm presenting at the time. So I want to stay focused. It's too distracting trying to do that for me anyway. So what we're dealing with is a radical Fed, a radical Treasury Department now. You guys remember I nicknamed Janet Yellen when she was Fed. I didn't have a lot of presence on YouTube back in the years, but I did, and internally I used to always call her grandmother Fed. She was the grandma. Now she got to be the fairy godmother, where she was going to give out money. Now she's the wicked witch of the West. And what they want to do is they want to utilize the world markets. The G7's a joke, okay? So they're trying to make a claim like, oh, the G7 all agreed to this tax deal. Well, all of the G7 has taxes greater than 15% anyway, so of course they're going to agree to that. It's easy. When it starts to get to D20 and you start to broaden the field out, that's where it will get interesting, and you're already seeing a lot of pushback on this stuff. And as my brother and I were talking about this just the other day, is that the system still works. The system is society, and society still works. Going to push back against some of these crazy ideas. There's going to be a group of people that agree, a group of people that don't, and we'll see how these battles all play out in the end. But as far as the Fed goes today, I think they might come up with a little mini surprise. They may hint, so let's get into the Fed. They may hint that They're going to taper. They want to test these things in the market. I've talked to you folks a lot about this on Fed Days in the past, as they're posturing themselves in a way to be able to test the markets. Let's say this, see how the market reacts, but we don't do anything. And it's jawboning. They've always used this tactic forever and ever, and it's not anything different now. So we'll see what they come up with. I think they want to start to test the waters on this taper idea. The fact that they're still spending billions and billions, $120 billion every month buying treasuries, buying mortgage-backed securities, buying mortgages in general, all of that stuff appears to be somewhat crazy. And I will, as we go through the presentation today, I will go and bring up lumber prices are continuing just to plummet, and that's okay, because there's a fundamental reason why that's happening, and it's not because housing market is halting. That's not necessarily what's going on, even though there might be a pause in some of the crazy action we've seen. But the Fed is probably going to test these waters today. How will the market react? I don't know. I mean, we're about as neutral as you can be. I'm looking at the futures right now. They're up 75 cents on the session. NASDAQ is up 0.5%. The growth stocks, as I keep telling you folks for a while here, is that the growth stocks or the large cap growth is going to continue to lead here for a while. The small cap leadership I thought was going to come back in, but everything kind of got inverted about a couple of weeks ago, and I'll show you the spread here in a few minutes. We'll talk about all that. Brian, you're right. I just was looking at the chat line. Yeah, they're going to talking about raising rates. I don't think they'll increase. They're not going to taper. They're going to test the waters, but they may start to reposition themselves. I think the primary area for them to do anything is going to be in the mortgage-backed securities, in mortgages in general. They can definitely pull back quite a bit there. They may just shift some of those purchases over to treasuries. They're probably not going to change anything. I suspect we're going to hear more of the same and all this stuff, and we're going to hear about transitory inflation. Let's go to that for a second, and then we'll get into some of the charts here right after I finish my usual rant that I start with every week. Is the from the standpoint of the where the markets are going to be focusing, I think will be on the treasuries, will be on the inflation situation. That's going to continue. It's probably 2 months from now we're going to find out that inflation is not transitory. I mentioned last night, and I agreed with somebody on the chat on the channel last night, that they said that, you know, our structure of income and, you know, of salaries is all jacked up anyway. I totally agree with that. That there's no doubt about it. That has been messed up for a while. So we do need some wage inflation. We do need people to be paid better. It just the issue is that is part of the inflationary. Here we go. I just got the message. Fed holds rates steady but raises inflation expectations sharply and makes no mention of taper, of course. But just wait till the conference call, and no reaction on the futures. Let me put those up for a second here. Let's just look at that for a sec. There we go. Now we're getting a little bit of reaction, down 37 handles. There's your reaction. So here comes the inflation story I was just talking about. Now, those of you that have followed me for a while, you know that I always talk about you fade this. This is a scalp buy here, probably within the first 3 minutes. You're getting a bit of a reversal already. So yeah, so there's your reaction to that news there. So just coming back on for a minute, I'll keep an eye on this on the other screen, but we definitely got a little reaction there. All of a sudden, we're back to the numbers that I talked about last night at 4,200. There's pretty good support. I've been a little concerned about this. I think if we see our WaveTech database roll over a bit tonight, where we maybe get a couple thousand sell signals, that could be the beginning of more consolidation with maybe some short-term negativity. We'll see how this plays out. Like I said, usually you can play this out. We're already bouncing. We were down 37 handles. Now we're down 29. So we're getting some reaction there. Let me go to another screen and we can kind of watch this together. And I'm still on screen. So you can see we're trying to set up some kind of bottom here. They should retest this low, and then that will be your probably the point where you can actually play this thing on the other side. But you can definitely see where. Let me go full screen here, just on the chart. There you go. You get a better perspective here. But typically, you get the big reaction, you fade the reaction, you buy the reaction, you can scalp out of it. There was probably a 10 handle scalp right there, just on that. So here they go, and just looking at some of the news lines coming across here. Fed projects 2 possible rate hikes by 2023, by the end of 2023. What year is this? 2021? We're talking 2 years from now? I'm just looking at some of this story here, folks. Yeah, so the Fed used to be about money, and now they're about climate change, vaccines, and everything else that they're talking about here. I'm just looking at some of the comments here coming apart right now. Just looking at a couple things. I just got the document here that said, here's what the Federal Reserve changed. This if you're looking at the chart above here, this is the retest of that spike low, and then we're going to find out in the next, obviously the half hour from now is when the conference call will start. So at that point, maybe we'll get a rally. We'll see how far back we can come. We're down 33 handles right as we speak. So that was, I think that was pretty much expected. I talked about the risk of the last couple of days. There's just no movement, and we continue to consolidate here at this 4,200 handle. I'll get into all the charts here in a minute. Yeah, and I agree, Brian. They're trying to project their way out, and this is what I was talking about before we got this message. Is this is how they do it? They test these words in the markets. They can see just a little mention of changing their forecast on inflation. All of a sudden, the inflation stuff is real, okay, and it's going to continue to be real. Is it going to be a negative in the markets? That's what we have to figure out as investors. That's the point of what I'm doing. Yeah, and yeah, I agree. David Ford just said, do people live in the real world that believe the Fed's Wizard of Oz stories? Yeah, so why is GLD down? Yeah, that's a really good question. Let's take a look at a couple markets here while this is going on. Well, I don't know. Gold is up 540 right now. I cover gold every night, so it looks fairly decent to me. I don't see any big reaction, negative or anything like that. Um, what happened with gold, and I've talked about this, we just hit this resistance level. I'll go through this in a minute. But going back to, I just realized, let me go back here. You see the market went down back to the 1 minute graph on the futures. It went down, tried to retest a little bit. Now we're trading back up. So almost always, I told you folks this story when I used to go into San Francisco to the Pacific Options Exchange, the old brick phone days, you know, the big brick phone. Used to trade before I went into the tunnel, and would always buy the reaction or sell the reaction to the news. Like if it was unemployment numbers coming out or something like that, you can almost always fade these numbers for a scalp. And depending on what you would have got filled at, the low of this pattern was 41.90. We're now trading 41.12. So there's a 20 handle scalp right there. And I should bring up, let's do that real quick here. Yeah, we went well beyond the STX number, 42.12 on the futures, the low 41.90. Figure we get some, this is actually really healthy because what's going to happen is the market grid's going to, the volatility is going to expand a little bit. If we can keep volatility higher for the next couple of days, then we'll start to see an expansion. I've been talking about the contraction of the market grid, which always signals some kind of downside action. And we've already printed down to the 21-day moving average on the E-minis, which is 41.94. We printed 90. The next number is 41.74. That's at major support levels. Still think those are good. So let's do this because we're kind of fragmented all over the place. Let me go through and let's go through the market analysis now and dig into some of that stuff. Just bear with me 1 minute while I get something set up here. Sorry about this. I had a screen freeze on me, of course. Okay. Okay. Yeah, the dollar has firmed a little bit. We'll go through all the details here in a second. Let's go ahead and dig into let me just put something in here. Okay, so I'm going to go full screen here. We'll dig into some of these markets here. Okay, as we look at the S&P futures, let's just start digging through some of these markets now that the noise behind the market is out. We're down 24 handles right now, down to 12. 90 was an extreme print on the downside. We printed all the way through. We're actually still trading through the STX number, which is 42.12. Last trade 42.13, so we're back above it. So that was definitely an aberration. We also went down to on the So I have the right chart up now. This is the September contract. We went down to the 21 period moving average, 4190.92, the low 4190.25. So that's about it. The one thing that is happening, though, if you look at the ppms on this page, ppm 1 is cut through its first second derivative, ppm 2 is collapsing, ppm 3 is not in trend mode at all. So we're seeing this thing attempting to roll over, and there could be a much bigger rollover than folks think here. So I just got one of the elements that I've talked a lot about as we go look at the weekly chart here on the futures. Matter of fact, I'm going to go to SPX. It's going to have better data. So we are trading right now, 4201 is the 10-week moving average. 4220 is the last trade on the cash. We went down to 4203. This is what I was talking about in last night's video, that we could end up down around the 4200 level, down to this 10-period moving average. Now the 10-period moving average, ppm 1 is up at a 0.22, and the ppms are actually the price pressure momentum. They tell us the probabilities of the moving averages holding, and right now it's only a 40% probability that we're going to stay above the 10-period moving average. So what that tells you is the next level down on the weekly would be 4,050. So we're just, I think the most interesting thing will be is to watch my video tonight to see how the database reacts. If we come in way under, let's say 56%, we get a big selling, that's going to tell us that we're going into probably at least a move back to 4,000. There might be something even greater in here. So this is becoming somewhat negative very quickly. And just a real quick comment. If you are a WaveTech user, this is going to be something, I just want to insert this because I know we have a lot of WaveTech, both institutional and retail folks on. If you are a user, one of the things you might want to consider, even if you're using intermediate charts, is to watch the short-term signals and at least downsize some of your intermediate trades on this, because this is becoming, I think, somewhat serious. And I've been talking about the risk for the last week. I continue to see some risk showing up in the markets where, you know, when we get to 4,400 or 4,600, or if we ever get there, I have no idea. But what we do look like we're having right now is this point. This is an inflection point that is finally here upon us, because one of the things that I also talked about, I recall in a number of live streams in the past, is that I've talked about that ultimately as we come into third and fourth quarter, we're not quite there yet. We're almost there. What is it? The 16th. And by the way, you could, for like, I think under $50, you could try WaveTech out and just get some of these sell signals. I think that this is going to be a really critical point in time. This is going to become very challenging. I've basically been laying back for some things in the last week or so, watching things. So make sure, I'm just telling you right now, make sure you watch the video tonight, and we'll see how all the stats start to roll over, especially as we come into Friday as well. And Sunday night's going to be a big video. So I'm just telling you folks, you should watch the next several videos. There's things coming that will be coming out of the database that will be big. It's funny because I just say Market Watch just sent a little tag, says Fed sees 2 interest rates hikes before 2023. That's 2 years, 2. I'm telling you, these guys are so far behind the curves. This inflation situation that we saw come out yesterday in PPI, they're acknowledging it finally. I'm sure, I don't know if anyone saw it, but I'm sure they're almost positive. They probably said, hey, this is still just nothing more than a transitory situation and everything's going to be fine. It's not going to be fine. This inflation is going to be around for a while in a lot of areas. And as I mentioned just briefly in last night's video, has a lot to do with all of the shortages that are in certain areas. There's most of the bottlenecks, at least with the container ships in California, have been fixed. For the most part, that's working pretty normal again. But there's still some supply chain issues and things out there, but they aren't as severe as they were. So that's kind of moved out and things are better, but there's still a lot of high demand on a lot of things. So just like, was it old saying, the best cure for low prices are low prices. And if lumber continues to come in, everybody's going to start buying lumber. There's a great trade coming in lumber. I'll go through that here just in a little bit here. Let's see. I'm going to be on camera here for a minute. I'm trying to open up another page because I think I opened up a wrong page on TradeStation here. Bear with me just a second. So let's see what you guys are talking about while I'll multitask a little bit here. Okay. Yeah, I did have a bad page up. So let me go back now. I thought it was weird. Some of my quotes weren't there. So let's go back and take a look at some of the stuff that is on the screen. Let's go to a weekly chart on the futures here. Let's go to SPX and go to the weekly. We are now 41.99 is the 10-week moving average. With everything that's happening here, I'm going to put a probability of 60% that we're probably going to print down to around, looks like we should head toward 4,000 on this thing. There's a couple 100-point potential sell-off coming off of this range. We closed Friday below these levels. I will talk about this in the videos over the next couple of days. I need confirmation from our database that we're going to get a lot of sell signals, but it is game time. And you have not, the last time that we had anything that looked like this was maybe back in September or on June 9th of a year ago. So we actually have that annual event coming where, you remember, we peaked out on 6/12 last year was a peak, and we had about a 2 or 3 week sell-off. This is in a much different position. We're still, I'll unpack this a bit more here, but we're still in uptrends, but we're going to need to probably correct from these levels at this time. There's not a lot of momentum building here. This is, I talked about this in last night's video, with us trading above 4,200 every day. I can't wait for our run. We run models on 16,400 plus symbols every night. I'm looking for some traction. No traction's coming out at all. Like, wow, this is another event that is is likely to end up signaling a top. We saw a contraction of a lot of things. So I'm starting to get pretty negative here on a short-term basis, and it may end up to be something bigger. I think what we'll see from Powell, I'll watch the replay of his conference later tonight and later this afternoon. And I think what we're going to hear from him is not a lot of certainty. We're back 34 handles on the SPX right now, down 34 on the day. This is absolutely is going to be potentially the tipping point. It comes right as we come into the third quarter. Everything looked fine a few weeks ago. People will criticize. Listen, I go with the numbers. We saw the increase in our database. We stall right at this 62, 64% level. I'm like, show me the money, Jerry Maguire style. And there's no money coming. And they've been not showing me the money for too many days. And we're likely to go on. I just saw now. So as we look at this is starting to get pretty serious. Let's go to the next level. I'm going to get this on full screen so you can see the charts better. And let me convert this over to a monthly. See if I can get on a little bit of a roll getting through some of these markets. When we have the Fed days are always very distracting, trying to stay focused. But this is interesting, actually, very interesting. PPM1 on this chart over here. Let me draw in some stuff so we make sure all of our eyes are focused in the right place. So PPM1 is right here. It has crossed its first derivative. That is the first sign that we will test the 10-month moving average. 10-month moving average right now, 38.10. The good news is in a couple of weeks it's going to uptick. I'll tell you what that is in a minute. But this is the first sign that we're actually going to test this. Since we started this rally and the breakout going back to September, that has been the case. I'm going to bring up our intermediate database and we're going to dig into that as well because I think this is going to be important. When I do this, these broadcasts, they are totally ad hoc. I do all analysis live. I don't have much pre-planned, okay? And so, but when we look at this monthly chart here, this is very interesting because we're seeing every PPM1 rolling over. PPM2 is starting to peak out, but it's not even in play. It's at 3,400. Let's see what this rise per month is. Bear with me. It's about 60 handles, 70 handles per month. So this will be 39.10. Everything's going to point toward the 4,000, 40, 50 level. I'll get this fine-tuned over the next several days. But this is definitely the beginning of something larger. And I don't think, I'm not a bubble guy. I'm not saying that prices aren't overdone. I'm just not seeing the very top of the top thing, but we are seeing the beginnings of at least a multi-month correction, I believe. And I will be paying attention to this and willing to take the heat from the trolls out there, right? That's okay. I'm a big boy. I can handle this. The main thing is really doing this. So I would just tell you folks, seriously, one of the attributes that we have had always with our software company, with portfolio management, is protecting assets. And somebody said cash is king. Cash is king, and it's not king forever, but there are times when cash is the only thing you should have. And I'm not suggesting we're at that point right now, but I am suggesting that our models are probably going to start to take you to cash. So let's do something here that I want to go with. And let's just go over, speaking of our models, let's just go over and look at our software. Now, I have both pieces of our software embedded. So WaveTech is a separate platform, but you can actually, if you're a pro user, you can actually put WaveTech inside. In this case, what I want to do is focus on some of the WaveTech numbers. I'll zoom in on these numbers here in a minute, because this is everything to me, folks, okay? This is what it's all about. And let's go over to the All Stats page, and we can get everything we need here. I will zoom in on the area that is important to me. So you folks should be able to see this section here. I don't know if I can, I would like to make this even bigger. Bear with me a second, I'm going to see if I can. This is as big as it's going to let me get here. So let's talk about this section right here. This is very important. Right now, we look at the weekly. Right here, optimize weekly. Let me draw in some stuff. I'm just trying to get some orientation here so I can see what you're seeing and I'm pointing in the right place. So let's do this. This column right here, we're going to talk about. And I'm going to have to move some things around. I tried to make it so big, I'm going to move something. Hang on. I am so sorry. Just trying to get this so I can see what I need to talk about. Yeah, I just can't get it to, I can't get it to show what I need it to show. Bear with me. I'm going to try one more thing here. All right, folks, sorry for this confusion. I'm going to bring this up in a browser just so I can get it exactly what I want it to be. So bear with me. This will be worth your time. Okay. Okay, I think I finally got it for you. Apologize for all the waste of time there. So here's what I want to talk to you about is we cover, you can see over here, is 16,403 symbols. right here, total symbols. Right now, on an intermediate basis, we're 75% long. So we'll just stay with that. And right now, you can't see where I'm pointing at. So you guys help me out. I'm trying to zoom in, and this is the problem I'm having. If you can read this screen okay, just let me know. Okay, so let's try to go with this. It's frustrating because I don't have a way of zooming in on this. Maybe I just don't. I've used Streamlabs, OBS Streamlabs, and I don't know how to zoom in other than how I've done this. So I need to spend some time to figure that out. So let me just get through this. Gosh, man, I hate that. So what we have in our database is we have the ability which to track every attribute of these 16,400 symbols. We can do it on a high level basis. We can actually narrow it down. We can build custom lists. We can follow things from a portfolio level, from a screen database level, all types of things that we can do. But this is the point of this, is that optimize weekly. I'm going to point to this column over here. And I'm going to put some arrows so at least you can see where I'm talking about. I'm just going to talk about it. I wanted you to be able to see the numbers a little better, and that's disrupted everything. But right here, optimize weekly. This is 201 average days held by the models. And this is interesting because there's a couple things that have happened. The duration fulfilled right now is only 50%. What that means is the average current duration of the 12,332 long signals. So what this is doing is actually causing a very 30,000 foot view of what's going on in the market on 12,332 symbols, and that is ETFs, mutual funds, individual equities, the lot, okay? And that's 75% of the database. So this thing is a bit long in the tooth, and I'll show you why. It was higher at one stage, and in fact, as we look at the current average profit is 23%, that's 80% of the profits have been yielded from those 12,000 symbols on average right now. What's interesting on the individual models, when you get here, 92% of the profits have been yielded. And when we go to the weekly 3-2, which is the longest holding model, it's 104% of the average returns. So we've exceeded that. I've actually never seen it do that before that I'm aware of. And I watch these numbers every week since around 1998, okay? And I've never seen the profit fulfilled exceed 100% of what is projected. Typically, it would get to around 70 to 80%, and the markets would top out at that point. we're at 104. So we're definitely long in the tooth. I've been worried about this element for a while. My hope was, and I'll clear these arrows off, my hope was that we would see the daily percentage come in a bit, start to migrate in, giving us the short-term confidence that we were seeing a rotation. Now, I brought that up right now. Let me just change screens real quick so we can go back. I want you to see this daily database is 60% long, not 75, and it was 64 just a couple of days ago, almost 65%. So we're starting to see some selling, and I have some key metrics I talk about on every night. 62%, 65%, 68, and 72% are all metrics that I watch very closely. We've been staying above 62%. We're back below it. I would suspect with the way the market's trading, last time I looked, let's take a look here. We're down 33 handles right now on the S&P. Then, you know, that we're going to see some pretty decent selling on the short-term models. In fact, we could see maybe a couple thousand. Last night we had, if you look at last night's stats, we had 673 sell signals, 300 buy signals. So we had a 2-to-1 sell ratio coming into today's open. And now we're down 33 handles, and I believe we're starting something much bigger. We're going to go look at the NASDAQ and some things here in just a minute. So, but as we look at the database in itself, it is very extended. It's not extended from a holding period, but the returns are way too much. So we're going to need to see some rotation. I've mentioned that a couple times over the last several weeks, is that we are likely to see some rotation on our intermediate database. What that means is that we're likely to see some selling, go from 75% back to 62, maybe even below 62, and start a multi-week kind of correction phase. Doesn't mean the end of the world, doesn't mean the bubbles burst, but we may find out things as we go on. And the way that I always have done my analysis is we look for key elements. We did make a new high. We're mid-month, so the month of June could end up to be a very significant one as we go through it. And like I said, this is refocused my analysis as we come into this meeting today. And it also takes me back to a lot of things I've been telling you folks on this channel, is that we're really looking at the markets bumping up against the ceiling, but we're seeing a lot of metrics that are telling me that we're not going to be able to accelerate here. It's been very mixed. A couple of weeks ago, it was starting to look like, okay, this might do it. This is the database that I was hoping to get some traction on. And if we got traction above that 68%, I knew the markets would be able to move to 4,300, 4,400. The fact that we're doing that, we're probably going the other way right now. And like I said, this is real-time response. Watch my videos tonight, tomorrow night, Sunday night are going to be important videos to watch. So if you're going to watch anything, watch that. If you're new to the channel, subscribe so you don't miss that. You know the deal. Hit the notification bell, the whole bit. But that is exactly what I'm seeing here from our database. We're seeing that it's long in the tooth. We're seeing a lot of elements come into play. So let's go back to the charts and let's take a look at NASDAQ. So NASDAQ down 158 right now. It is trading at its 10-day moving average, 13,860. I mentioned this number in last night's video. It looks like if we can close under there, we're getting a crossover on PPM1 through its first and second derivative. PPM2 is still positive. That tells us we're heading for 13,000 711, that number's rising about 20, 13,730, 40. I'll fine tune that number. Would probably have to go to a weekly chart here to start to get a better understanding. I mentioned, I think in the last couple of days, that 13,752 is the 10-week moving average. So that's approximately the number we're going to hit. But we're seeing the same thing here in the NASDAQ that we're seeing in the S&P. We're seeing these metrics start to roll over. PPM1 on a weekly basis on the NASDAQ futures is only up 0.3. That is telling you there is a 90% probability we will go through that 10-period moving average at 13.7. The next level is 13,460. That will be significant. PPM2 is very negative. PPM3 has not really, is still positive, but that's way down at 12,811. So each one of these PPMs track a 10, 21, and 40 period simple averages, tell about the probabilities, what's likely to happen. And right now it's a 90% probability we're going to get through 13,751, start to head toward 13,460. So this is all happening right after we printed an all-time new high, right? So let's go to monthly and look at this. Monthly charts are actually even more pronounced. PPM1 over here, I put a cursor there. That is crossed to its first and second derivative. PPM2 is going through its first. PPM3 is already through it. So we're going to see a move which will be somewhat similar to the 40-week moving average. The 10-week moving average, 12,777. I just mentioned 12,800 and change. That was the 40-week moving average. So that's where this market's most likely heading to. And the setup that we're likely to see out of this will probably be a high-level consolidation. I don't think we're just going to slice through that, but I'll be updating that daily. So, okay, let's flip over. Let's go to Russell, and then we'll do a spread, and then we'll start getting down the trail here a little bit. So Russell's down about 1%. This is actually the cash. Target here, 2275 on the downside. PPM1, very similar formations. PPM1 through its first, second derivative, which tells you we're heading for the 21 at 2275. There's decent, some support there, but not a lot. Ultimately, we'll probably end up at 2261 on this. Let's take a look at the spread chart real quick here. So this is interesting because we're seeing some overperformance today of this. But I had talked in detail about this a couple weeks ago when I went through the spread. And I talked about this level right here being pretty major resistance. And what I thought we'd see is something like this and then go down. The key level will be this low right here. We penetrate through that, then we'll probably see this level tested, and most likely we could see something even bigger, which tells you that the small caps are not going to be doing well at all during that period if these things happen. And this is an if. First events first. We're up against the resistance zone. This will be your first support. I suspect we'll get something like this, a test, and then we'll know about this, and I will cover this when I see this happening on my daily videos. Yeah, so just looking at some of the chat line here, just make sure I'm making myself clear. Yeah, if we get to close underneath these numbers, and I will set this up in tonight's video when I've got a focused laboratory view of the world. Hey folks, I have a extremely important call I have to take. Hold with me 1 second. Thanks for that. Appreciate it. Yeah, it was Powell calling, exactly. So yeah, so let's go to something else here, and let's just keep on going on here. And in fact, I want to close this workspace because it's annoying me. It's not the one I want. Yeah, I'm really getting weird quotes on TradeStation. ES is showing on the table that it's flat on the day, where the when you put it on screen, it's down 40 handles. So we're back at 96, the low 90. So we're back retesting that low. Yeah, so yeah, Kathy needs some help. That's for sure. Yeah, I did go through all the S&P levels, but let's go back and review that. Okay, I just want to make sure everybody gets that. I'm going to do the cash levels. We are trading down on a major level here right now. I'll put that on screen, which is the 4202 level. That's going to be critical. Just below that, 4187. That's a critical level. And there's another number at 4175. But if we go to the weekly, so we're back on the S&P for a minute here. We go back to the weeklies. 4200 is exactly 4199. It's updating real time. Is the 10-week moving average. We close below that. That will confirm a move to 4050. And I don't see us getting down below that 21-period moving average. There's substantial enough momentum to hold the markets above there, but that's still a pretty decent hit from here. And it won't be a straight line. Like I said, tonight's video, I'll cover this stuff after we see how the dust settles from today. We've still got a little bit over an hour to go, so we'll see how that all settles. Okay. Yeah, it's funny. All of my quotes on the right-hand side are all wrong. So here we are with the 10-year up at 157. We're about to get above some of the critical levels. Here we're looking at getting above the 157 level, which would be the 10, but we're also probably going to get an RTXL, which tells us we'll go sideways for a day or so. But the interest rates, this going into the 10-year here, this is going to be really important to understand. I talked about this last week. This is the weekly chart, okay? What I want to put up here is this ratio. It just came out. This is projecting that interest rates are going to go to 2.73, 3.2. The key level is going to be 1.94. That is definitely most likely where we're heading for now, is heading toward 2% on the 10-year. And I think this will set all of the PPMs are starting to turn up. This is going to take a couple weeks, but this inflation story is going to get very, very big. Something I am going to do, folks, I'm sorry about today. I've just got some big things going on right now, and Powell's calling again, so I'm going to need to put you on hold. I'm going to put you on on the starting screen, just so you can see, because I need to use something on my monitor and get this done based on the phone call I just got. So bear with me. It should take me less than 5 minutes. So matter of fact, let me see if I can get something set up on the other side, and I'll just turn off the sound, okay? So you can at least watch the markets. I'll put this chart up here so you can watch it. I'll be right back as soon as I can. Bear with me one more minute, folks. Okay, I am back. Hey, folks, I just want to come on. Sorry for all the distractions today. You know, life happens no matter what's going on. So I just had some major things going on. Yes, and Jay Powell called me twice. I mean, I don't know how he can finish, how he runs his life without me. Anyway, um, I am going to have one more distraction here in a little bit, so I'm going to do my best to keep things going along the line. So it's not a typical day. Like it is what it is, right? So um, it's all good what's going on. It's got to be dealt with like very timely. So uh, off we go. Let's go back to the charts. Hey everyone. So now just to make insult to injury, TradeStation is completely collapsed. So we're going to go back and and the only way to get that thing to run again is to reboot and to kill this meeting. So this thing, I guess today is just a disaster for the live stream. So what I'm going to do though is I am going to attempt to bring up TradingView, and we'll go from there and see what we can get up and going. So let me get that set up on the screen. Let me see what you guys are talking about here, just see what's going on. Yeah. Yeah, thanks for the comments. Yeah, it's like I don't get paid well enough for this job. You know, this is a service that we do for participating with folks. You know, this is really what it's about. I have a big agenda in helping investors. I always have for a very long time. And let me just see if I can get a couple things going here and see what I can bring up. And a lot of this stuff we can do because I have, let's go over and go full screen here. Let's take a look at TradingView. And I don't know if you guys ever noticed, but you can almost fade this little TradingView technical indicator. If you're using this stuff, you can buy when it says sell and sell when it says buy. It's and now it's neutral. It was screaming buy. It's kind of interesting. But I do have the PPMs here on the chart, so everything's here, and that is the actual market grid, so I can function. I'm just going to try to finish this the best I can, and I'm probably going to end up having to cut this thing short today just because of what's going on. And it's significant issue. I try to schedule everything around Wednesdays, believe it or not. This one's not reschedulable. So I am dealing with it. So you can see here as we look at this chart that we did trade down to that 21 period moving average. This is the SPX, and I use this chart. Let me just see what I've got up here, and I think I have some auto saved here. Let me see. No, that's not the one I want. Bear with me. Yeah, I'm trying to find a saved chart that I have, and yeah, I'm not finding the chart I'm looking for. This has pretty much been a There we go. It would help if I knew how to use this platform. But one of the things that I have talked about, and I thought this was the chart, but let me look again. It doesn't appear to be the one I thought. There we go. Finally found it. So one of the things, this is a chart. Let's just get into a long-term, talking about S&P long-term here, and try to get back on track with what's going on in the markets. Like I said, I'm not going to be able to bring TradeStation back up without killing this entire session and stopping the live stream. So I'll do my best to use this platform. Sometimes life forces you to learn on the fly. So this is a long-term wave count. This goes back to the lows in 1932 and counting the wave count, and everything clocks out to being in wave 5 of 5 of 5. And what's not broken down real clearly here is this final sequence as we come out of the lows of '08. This is a quarterly or a 3-month chart. So it's a very long term. Each bar is a quarter. So this bar is about to complete. We still have, like, if we just look from a PPM viewpoint, we still have an extremely strong market. And this is also going to be why we're going to get maybe a correction for a couple hundred points. What is that going to be? Maybe a 5, 7, 8% correction, and we're not going to see a collapse at this time. But these charts are completely suggesting there is much more. And I've talked about numbers of 4,400, 4,600, even further. We're going to have to watch this next sequence and see how it plays out. And I think we're going to have a lot of clarity as we come into. Yeah, Gary, are you on as a follower of mine on there? Yeah, and that's exactly right, David Ford. Wave 5 has a long ways to go yet. And in fact, there's an argument that we're still in wave 3 of 5. There's going to be a large correction since it's so big it could be a 2-year correction and then a resumption to the upside. So this is the kind of chart, talk about watching, this makes watching paint dry fast. Okay, this is the big chart, right? And we start to break this down on a monthly basis, then we can start to see, this is the chart I was just talking about. This is potentially just a 1, 2, and we're in a wave 3 at the moment. So this could be a minor 4 we're about to go through, probably go into a weekly chart. Let's just see how this stuff all lines up as we go through. Yeah, so this big red line is basically a big 5. So we're really looking at this thing maybe backtracking into the lows that we made. See if I can get some numbers here. Back in, that would be big, right? That would a retracement back to just trying to get the numbers right here. Make sure I don't misquote. Yeah, so we're looking at maybe going back and retesting May lows, something like that. That might be what we're looking at here. Let me put this further back here. What are those lows going to be? 40, yeah, so 41, 12, 40, 50, I mentioned a little bit ago. Those are numbers that we're likely to go to, okay? So let's go up here, and I've got the daily lumber chart up here. I want to discuss that for a few minutes. Down 14% today. We go out to the monthly chart. We're coming down to the 10-month moving average. We'll find out if that will hold, but it's crossing through ppm1 to first, second derivative. Everything's collapsing on this chart. My expectation is that we will see it at least maintain itself around the 500 level. I can't put a market grid on here. Let me go to my scripts. I believe this is the right one. Yep. So we start to put market grid on here. We've exceeded on a monthly basis anything that looks like real. We've exceeded the market grid all the way down to the 40-week moving average. So there is going to be some support. It's up at 0.6, but we have crossed first, second derivative. This is a complete collapse in prices. And I mentioned a lot of this is happening because mills are coming back online. Some folks have halted some projects. Well, they're going to turn them back on. So there's going to be a big trade on this thing, probably a 50% retracement or something like that. So lumber is still going to be in play. It's just, I wouldn't be grabbing at the falling knife. So, yeah, like I said, I'm kind of stuck in this. I'm going to do a switch over here to weekly silver chart. We'll leave everything on here. Just not a lot going on here. Let me go to monthly. I talked about silver for a while here, and really what we're seeing is it's locked in this big grid range right now. We're up at the upper end of the grid, 2624, 2693. Let me get the right numbers. 2624, 2693 are the numbers to watch out for. PPMs are actually collapsing on a monthly short term. So it's just very mixed. We're going to stay in a sideways range, probably remain above the 2370 level, sandwich job between there. Let's just go to let's go to gold. Let's do gold real quick. Same thing on a monthly basis. We're really locked in at this upper end of this range, which is going to be, and I've talked a fair amount about this around. See, what do I got on here? Contract front. Hang on. Okay, I've got the right contract up here. But yeah, on a monthly basis, we're right above the ranges. 1880 was RXT monthly. Let's go to weekly real quick here. On a weekly basis, we're trading at the lower end of the range. The STX number 1840. And I guess with the higher rates, the gold is hating that, so they're printing it down. I thought we'd hold the 1844 level. We're seeing this. Listen, I really feel wounded here. I'm going to attempt to restart TradeStation and see if it'll come up for me. This is really frustrating me because I don't work this platform that often. So bear with me again. Yeah, folks, I can't seem to win today. This is one of those days. Now TradeStation is updating the platform. So we'll see if it comes up. You folks are patient. Thank you. Yeah, Red Rocker, I hear you. No offense back, but I'm not waffling. I'm reading the data. So hopefully I get to change my mind. That's called trading. I still think the longer term targets are in place. I just think we're about to go into a correction, and that's how it works. Markets change. They're dynamic. They're not static. I wish they were. Make life easy, actually. Yeah, I'm just trying to get this platform back up. It looks like it's trying to come back up. And by the way, waffling is okay. That's called reevaluating your ideas, your concepts. I know I see people out on the internet all the time, and hodling and all the whole bit. So let me just see something here. I am going to try to open this up and see if we can get back online. We'll see. The pages are opening. So yeah, waffling. So there are guys like Harry Dent, Peter Schiff, a bunch of those guys that are willing just to keep saying the same thing over and over and over and over and over. I'm being driven by data. I've been talking about the negativity coming into the markets, and so far it looks like I might be back in business here. We'll see here real quick. Yeah, I'm sorry. Usually I have a nice methodical way to go through these things, and it's just not happening. All right, folks. I'm waiting for an email, so I've got to stay on top of that. Yeah, so we look. Looks like everything's running. So we're talking about gold. Let's just go to gold, and we're seeing some pretty drastic moves, but everything flipped, and we knew there was a possibility of everything flipping, right? I'm not saying hi. I'm just trying to get my camera to reactivate, okay? But yeah, let's go ahead and go back to the charts now, and we should be able to see what's going on. Yeah, Peter Schill is all right, yeah. Yeah, so somebody's asking, since I'm kind of crazy live stream today, any update on TradingView timing for grid and PPMs? Had a meeting day before yesterday on that, still being worked on. one of the issues is there's a lot of proprietary script that I'm trying to protect. So we're trying to get an API that will allow us to actually authenticate people without doing one by one. And, my expectation is we're going to have a lot going on there. So. Yeah, that's cool, Wave Runner. Let's go over there and take. Yeah, so now we're down 1350. So today's close is going to tell you a lot. To get the numbers, to get the correction I was talking about, not waffling, but we're going to need to close under 4,200. Okay, right now we're looking at 42.32 on the futures. We got a long day ahead of us. Let me put up the SPX. We're 33. We're bouncing pretty nicely. We're back into the range on this thing. So it's all about the close this week. It's all about how the database responds. So I don't know if waffling is it. I don't have any decision here. I'm telling you there is a risk, but we've already printed 41.90. This thing ends up closing higher, then it negates everything, So we gotta pay attention to this. And like I said, if the 1 minute, if you watch the rebound that has happened here is pretty significant. We're now down 11.95 on the session, so we're continuing to rally back. The high of the session was 41.16. Last trade. Is that right? The high was 41.51, wrong bar. Low 42.02. I talked about this. The 42.03.52 is the 21. So we're definitely seeing this thing go up. The markets aren't random, I agree. I'm just looking at some of the chat line. I'm going to hang out with you guys to the close, but I'm not covered the kind of things I want to do. I do want to mention one thing here. I'm going to put up Bitcoin real quick. And I talked last week about Bitcoin, and I talked about the expected range moving up to around the 41,000 level. We went 41,311. That was right into R1, R2. Last week's low, we printed down to 31,000. We had 30 S2. So we did an S2 kind of a R2 range as we look at this thing as we go over the last couple of weeks. PPMs are still very negative. Overhead resistance now coming down at 45,000, but it is dropping at 2,000 per day. So literally in the next 3 days, that 41 number is going to be major support. Major resistance. And what my expectation is for this market is that it will remain between the 34.8 and that 41,000 number rough is going to be where we'll hide there. But that is exactly that rebound that we saw last week when we were doing the live stream. Yeah, I think last we were at 32,000 low last Wednesday, right here on the reversal day, and then we rallied up to that 41. But I think we're going to stay sandwiched on a daily basis. Going to be very similar numbers. We're looking at somewhere around 37, 35,000 downside. Upside is going to be locked at around the 40, 41, maximum 43 on the upside. Let's cover the Dow. The Dow is moving big time, and it's heading towards its 200-day moving average. I talked about this a number of weeks ago. I thought we could print through the 89.20 level. We never got through it, and now we've got this bottom setting up. If we go over and look at the weekly, we'll see we're up at the 21 week moving average, 91.09, last trade 91.12. Looking at the 40, 91.50 is going to be similar to the 200-day. And then ultimately, if this thing plays out like I think, this is going to be a pretty significant bottom. So somebody asked, is the gold trade dead? Probably. It's not going to, I think it'll find decent support here. Well, I'm going to go through gold next, so I just wanted to set this up with the Dow very quickly. So let's go ahead and take a look at gold. Gold on a weekly basis is trading at STX 1833, 1844 was the previous low that we had, and it's also coinciding with the 10-week moving average and the 40-week moving average. They've converged at the same point around 1840. We should be able to hold here. We've got fairly positive PPM1, which tells us that it should hold. There's about a 60% probability to remain above that 1840 level. So we'll see how this thing comes into the week. But I think ultimately we are just consolidating between those highs that we printed up here at the 1906 level. I remember telling everybody there's a lot of resistance, 1906, 1915. We definitely hit that. Now we're trading down into this corrective phase, and this should be right around the low of the market. It's the extreme 1833 is STX, low 1831, so we've printed into that. We'll see how this thing finishes. I cover it every night, so make sure you tune into that. Yeah, so here's British Pound Weekly. It's starting to roll over as well. It's going to be, there's support at 139, and the ultimate low probably is 136 in this pattern. There should be some support at 139 on the pound, just a little bit below where we are right now. These are the futures, near futures that we're looking at. I think the close today is going to be interesting to see how we stabilize here and what happens definitely overnight. Yeah, thanks, Jay. I was just hesitating to get Eddie and Angelina out. I think it's my ex-wife again. What do you think, Jay? Eddie, Adriana, I think you're the trash. All right. That's too funny. Yeah, we're just going to go random here. Here's Russell 2000 ETF, IWM. Still got some positive slope to it here on the ETF, that's for sure. Exactly, Carl. You have no idea. Hey, Jay, maybe I should put some pictures up, huh? Sorry. I want to be a bad man right now. Okay, so back to the markets. IWM doesn't look terrible. Major supports on the weekly here at the 223, 225 area. That's going to be big numbers. We're going to be watching these markets real closely, so I'm not going to come up with any answers today in the middle of this stuff. We're starting to see E-minis sell off a little bit here. We'll go into the close here in a few minutes, but I know, Jay, right? That would be awesome. Especially if that's who it is. Okay, let's see what else you guys are talking about. Yeah, I guess that's what a lot of folks Mattias, I guess, is, yeah, negative real yields. That's what everybody's talking about. Yeah, we're still into that mode. And I think gold's going to have some issues here, but I think it will hold the support. We're going to find out how this intermediate trend is going to hold together. So I cover that every night. Exactly. I think Jay could tell you he knows everything. Exactly. You already answered. I saw on the timeline. Oh, man. I want to have a Zoom session with everybody that's been through a nasty divorce. That would be fun. The only thing I will say, I'm going to say something, is Jay's mother is a pretty good ex-wife. That's why I'll say that. We've been divorced for 25 years plus. So anyway, but yeah, if you're going to have an ex, she's a good one to have. This other one, not so much. Yeah, so Wave Runner, what are you talking about? She's one in a million. Oh boy. We got to be careful. So here's a 1 minute chart on the S&P, down 17 handles. So we've reversed over half of what we were down. So we've come back pretty good here. This close is going to be interesting when we come into this. Yeah, maybe I should join that channel, Carl. Yeah, so yeah, I think the algos did push this thing down. They printed 90 for a reason. I'm sure, David. Oh man. Yeah, so we'll go over and take a look at a couple other charts. Love used to be my favorite airline. Starting to print down. This is a weekly chart on Love. We're moving down probably toward the 200-week and 40-week moving average, 51.36, 54.63, 51.36 is probably the range where this stock's heading. It can't get any planes up in the air. It's pretty tough, huh? Let's go back to the futures for a minute. I want to pay attention to this close. That's probably more interesting. Yeah, that's pretty funny. Yeah, what did happen to Garden Chick? She's gone. Yeah, I think they did hedge their fuel, and that was more of a damage than anything else at one stage. 'Cause now it should be a benefit, but I think their flying issues right now are costing them a little bit of money, to say the least. Yeah, so let me see what I can get going here. Um, this is the account. I haven't looked at this. Let's take a look at the Warren Buffett strategy. Right now, as of probably looks like today, we own 0 airlines. This strategy is up 12%. Let's just take a look at the trade log here real quick. So everything right here, everything was sold out on, there was a big block here. Let me highlight this. There's a big block sold on April 20th. Basically blew out all the airlines, UIL, JetBlue, Alaska, Delta, Sky. Everything got blown out here. And so if we look at the summary page here, you see we're got zero longs now, up 13%, up 102% last year. It was a great year. Telling you, last year was an opportunity of a lifetime. This thing is just going to get harder and harder to make money in, I believe. Let's go just real quick and let's look at the intermediate. Looks like the intermediate Buffett strategy still got everything long on here on an intermediate basis. Just look at the open positions here. Yeah, still got some pretty decent. This is end of day, so last it was updated was last night's market prices, so these aren't current, but this is showing trades that came on back in November and December, some way back in October. So these are the current profits on the book. The only one that's fairly new is UAL. So this is something you watch on a weekly basis. There won't be any new trades on this until Friday, so we'll see if it builds cash. But right now, what it's got on here is actually 98.66% of the money is working on those stocks right now. And it's up 20.37 on the year. So always interesting to look back. This is a portfolio we built on a live stream last year in August 6th, it looks like. It's up 34% so far this year, up 64% at the moment. It's got 18 symbols long, 77% invested. I'm not sure what's in here. Just kind of randomly brought this up. But you got Carnival in there making some money. Yeah, so this is all the stocks that are in this portfolio. Yeah, we can do some. Yeah, we're coming back only down 9 handles now on the S&P. So we're definitely getting a pretty decent rebound off of these numbers. 4,200, 4,202 is the magic number on the S&P. So we're a long ways away all of a sudden. What felt disastrous earlier is already starting to come back into play here. Yeah, the algos were definitely pushing that thing. Yeah, Occidental. One of the things we didn't cover, let's talk about real quick. This kind of triggered me into gold. Crude oil was up at $72. I just remember last week when it was at 70. We were talking. Let me put the daily up. Yeah, last week we're at 70. We're already up to 72. I know, according to the genius Kathy Wood, we won't go over to 76% because we're using less crude oil now than we ever did. I wish she was as smart as she thought that she thinks she is. But anyway, this is, we look at weekly, we're seeing continuing upward movement, PPM's off the map bullish, lots of momentum underneath this market. And if I put up the Fibonacci targets here, targets, I talked about these last week, 91 to 104 is the minimum target. The extreme here is for a move up to 112. I don't think we get there, but let's go to a monthly. I talked about this virtually every week. We're heading toward the 200-month moving average. 108 is dropping. It'd probably be between 91 and 104 is my upward target for that. Yeah, I think you're right. Like Kathy Wood's library glass. I don't know if you guys noticed, but I can't listen to her broadcast. Everything is, we're in I can't handle it. I can't get through 30 minutes of that. It's just, she needs to get a speech therapist. And the stuff she's trying to say, I want to listen to, but I can't. It's just crazy. And if you notice, they blocked the comments on her YouTube channel, which I thought was interesting as well. Better looking Bernie Madoff. I'm not sure about that. Yeah, so we're seeing some selling come back in here. Let's go ahead and go back to the level 2 screen here. So it kind of spiked out there. Just going to be a lot of volatility. We're not going to get any answers today on this thing. I'm anxious to actually hear what was said. You know, they're going to continue to posture, the Fed I'm talking about, will continue to posture around this thing, just trying to come up with some sort of answer that will keep us all engaged. Yeah, so I know yeah, I have a good friend that always says, who has had the opportunity to work with a lot of famous Hollywood types, and he said, I wouldn't wish being famous on my worst enemy. It's really tough to get into that limelight at that level. That's for sure. Yeah, so we're going to watch this close together, folks. I really am going to apologize. I had such high hopes for today's live stream. We may end up doing something else as the week goes on. I've just got some major distractions going on all day today. So yeah, I'm just anxiously waiting an email. So yeah, and JJW, I agree with what you're saying here, and this is my basic premise: is that you may call it a bubble, but if they don't take the money out, it's going to stay inflated, and all of the asset purchases, low interest rates, massive stimulus. I couldn't agree more about that, but we are going to have some points in time where we can get some things going. So I'm going to go back to some of the things I said a couple hours ago, or an hour and a half ago, whenever it was, that we need a close under 42.02 to signal a move down to 40.50. We don't have that yet, but there are continued risk. When our servers run tonight, we can see our short-term models, see how they responded to this. It's down 0.5%, no big deal. Down 18 handles on the futures right now, so not a lot to go on there for sure. Yeah, I think the reason why gold isn't mooning, as you said, is just the higher rates. You're looking at 1.569. You're up 5% on the 10-year today. just not going to get anything positive out of gold on a day like this. And just bringing up gold real quick here again. I did not bring up the monthly, but we're on the backside of the monthly now. There's also support here. 1831, there's the number. 1831, I talk to you folks a lot. There's a cluster of numbers. 1831, let me switch over. Go to weekly. $18.33 STX. The 10-week moving average, 18.39. 40-week moving average, 18.42. So it's definitely lots of support right here on gold. So there's just a lot of overhead resistance on gold, and I've been talking about that for the last couple weeks at least. Yeah, Nelson, I agree with that. Markets do stay, they go a lot further than you think they will. Let's go back to level 2 here. Selling off a little bit more, 20 handles down, trading 26. Long ways from any material numbers triggering any trends. We're definitely in a downtrend at the moment. We're seeing a little acceleration on the 1-minute graph. Yeah, Daryl Ford, you're probably right, and they've been really wrong doing that if it's true. Yeah, I did a Bitcoin update. Got about 8 minutes to go. I really want to focus just because it's big day, see how this thing's going to finish out here. I did cover crude oil just a minute ago, actually. Yeah, I know of several people that at least think they're smart that have been 100% in bonds since December. Bonds are declining while the markets have been advancing. They completely got it on backwards. Yeah, I try not to use any. Matter of fact, the only number I do use on my averages, I use a 200-day. I never used to watch much of that, and I don't use the 50, 100, all that stuff. Too amateur for me. What I use is 10, 21, 40, and the reason why I use that is they mapped out to the WaveTech methodology, which is a combination of understanding momentum, probability, and moving averages around wave counts. And I am going to introduce you folks to that in the very near future. And that will happen very soon. What time we got? 54. Yeah, let's flop over. This is a weekly chart of GME. Let me go to daily. Support on GME 198, resistance 132, last trade 224. if it can hold this level right here, we should see another possible retest up at these higher end levels here around 290, something like that. But we're going to have to hold this support level 198. Back to level 2, futures, still down 20 handles. Oh, Mr. Tater, I was waiting for you to do that. Has anything changed in that thing? We'll take a look here in a minute. Who's Harry Dent? That's pretty funny. Yes, SPX does have a long term. He has. I don't know how Harry Dent has subscribers. Yeah, volatility, as far as transactional volatility, has slowed down substantially here. Very normal feeling trading at the moment. Not a lot of frenzy as we come in 4 minutes to the close. I'm not feeling the anxiety, if you know what I mean. Just talked about GME. I would agree with you on the analysis of good old Harry. People do love to hear bad things. They sell much better, and that's why zero hedge, which I call doom porn, that's why they exist. If you want to find out what's never going to happen, go to zero hedge. Great entertainment. Yeah, I don't know if we'll get to that level, Daniel. Yeah, 24 prints as we come in 2 minutes, under 2 minutes now. So let's watch and focus on the close. As you know, I always watch the last 2 minutes and of the trading with the cash, and then we can see what squares up after that. Yeah, I do remember Floyd's Garage. I was actually started in the markets in 1979. If you go back to 1979, 1980, one area where interest rates were at 16 to 20%, depending on what rate you were looking at, that is most likely similar to as crazy as it is today. If you recall, the federal government was going to need so much money, there wasn't going to be the demand on financing the debt in 1980 was supposed to have the effect of taking all the money away from corporations to finance. And that actually never happened. AJ, I agree totally. Totally. Yeah, Peter Schiff is that guy as well. All right, so we are done. Nothing really happened. That was way too normal. Let's see if there's any short covering. My guess is there won't be. We're down 0.5% on the futures. Take a quick glance at the cash here. See how we're closing up. The cash goes out here down 0.54, 42.23. Nothing. One of the things that we did get, this is interesting. We're going to close out on some of these here today. STX 42.27, close 42.23. So we got an STX buy signal suggesting the next 2 days will be sideways to up. As I mentioned, we'd have to get a close under 4,200. I'll break down all of this stuff in tonight's video. So make sure if you haven't subscribed, please subscribe to the channel. If you want to support the channel, then there's plenty of ways to do that as well. And you'll find that on the nightly videos. Our software delivers a lot of value. Yeah, JJ, you're right. Michael Burry is also right, only he's a few years early. I love the scene in The Big Short. I actually watched The Big Short a couple of weeks ago, like twice. I went through all my favorite scenes. I watched it totally, and then I went through all my favorite scenes. I'm like one of these binge watchers. And I was watching the scene when he's leaving the office, and the kid asked him, and said, are we going to, the investor's going to take their money out? And he's like, I don't know. He goes, I just don't get why the markets are acting like they're doing. He goes, well, are you wrong? He goes, I guess when you're wrong, you can't see that you're wrong. And he ended up being right, but he was early. He goes, I'm just early or something. So here we go. Dow Jones falls 260 points. Fed signals. This is what the headline guys are doing. So the headlines are saying that the Fed signals 2 interest rates hikes in 2020 before 2023 in 2 years, and that's something to respond to. Man, yeah. I do the same thing, JJ. It's like, yeah, I have to. There's certain things I have to watch over and over. So, folks, welcome. Thank you for coming, and I really appreciate it. Today has just been kind of not the normal, so I'm disappointed in how the session went today. Just had way too many distractions, and they're still out there. So, yeah. So I covered this earlier that the S&P could drop to 4,200 if we close under, 40.50 if we close under 4,200. Well, it's going to be very sensitive. What I'll be looking at in tonight's video, I'll be covering the database, looking at exactly how many sells, what kind of buy-sell ratio we get. Sometimes these little days, I mean, we're down 0.5%, not a big deal. But sometimes these little days can trigger a lot of selling, which will lead us to fewer and fewer short-term trends being involved in the markets, which ultimately presents some risk. So, and that's what I've been talking about for a while. So anyway, I think we're going to wind it down. Sorry we didn't get to a lot of the stuff we normally do. It's just been an absolute crazy day for me. So I appreciate you all hanging out. We had quite a few people hanging around today. So yeah, I think we could, whatever those numbers were, Christoph, when I was looking at that. And by the way, I did want to hook up with you, Christoph, on the send an email or contact information, Skype, whatever, to info@Kendall Report. I do want to reach out to you. Yeah, and the reason why rates uptick during when the reason why the markets uptick when rates are being raised because the economy is usually getting better. So yeah, it doesn't really that's not really what matters here. This is just all noise in the marketplace, and enough to create some. Yeah, the Augos had some good fun today. They got to trade this thing down to 4,200 and bounce back to 42.23 by the close. Yeah, no, that's fine. That's fine. Just whenever you get a chance. Talking to Christoph. So no problem, man. Just yeah, there's a lot of things I'm working on. Trading View, some other stuff, and it's just all good. So anyway, folks, thanks for watching as usual, and watch my videos the next few nights. I think they're going to be insightful. We'll see what comes out of it. Anyway, adios. Talk to you soon.